Welcome back, everybody. It is Tuesday night, and this is Vetted VA Live. I was out of the mix last week. A big thank you to Nathan Nottingham for stepping in and taking over. Was traveling in North Idaho, and we did not have a stable internet connection, so Nathan had to jump in there at the last minute. Tonight, as usual, I am joined by a great set of vetted pros, all lenders tonight. We've got Nathan Einkorn, we've got Jerry Avila and Leroy Romero, and we are going to be talking about a very interesting topic, basically a channel of loans. I don't know if you necessarily have to avoid, but something that a channel of loans that definitely caters to or reaches out to veterans on a big scale. And there are some pitfalls to that will have you paying more than you need to and maybe not getting the knowledge, expertise, and service that you need. So these three pros are going to walk us through it. Remember, as always, our number one purpose here every week is to get your questions answered. So if you have a question about banks, brokers, big box lenders, anything VA, mortgage, real estate related, we are here to answer your questions. Throw them up in the comments. We'll make sure we get to them. With that, Leroy, why don't you just start by walking through not just a veteran, but any potential home buyer. They got a plethora of different choices, not just of different specific lenders, but different lending channels to go through. So when we talk about lending channels, what are the different choices that we're talking about?
When you look at your traditional banks, right, those are going to be your stand-up banks, places where you make deposits at, the Chases, the Wells Fargos out there, maybe federal credit unions. You can't really visit a USAA, but, they've got a very strong hold. That's going to be more your FDIC, right? A lot of those companies actually don't even have to have licenses like you would a mortgage banker or mortgage broker, individual license. So they fall under that FDIC where they don't have the additional education that you would normally get with, say, these other types of, entities. There's so many out there as well. So those are kind of what we look at.
Let's circle back to that, Leroy. That is something really important about tonight's discussion, that education licensing component. So let's circle back to that. But just in terms of, keep it simple, where can someone go and what are those different choices besides banks?
Well, you've got your retail establishments. Okay, those are going to be like your mortgage banks. Those would be something like your Veterans United, your Fairway Lending. Essentially, what happened is when that was all created, right, we all are under regulation on a certain comp level or structure. So once you create your own bank, now you become not privy to some of those rules and regulations where it comes to comp strategies, right? So comp strategies would be something where a certain amount of interest rate that you're charging has a certain yield spread, and you're able to keep that. So that's where we see a big disparity in like a mortgage broker or a mortgage banker or an actual banking institution. When we talk about, Josh, if you don't mind, let's talk about the education, because that's what we're here about, right? Educating the veterans, spouses, or family members that are in the group that look for Vetted VA, and while it was created to share information openly with veterans so they have choices or can make their own choice on where they want to do business. So when you're dealing with what we would call those big box lenders or some of those banks, a lot of those individuals, they have a national number, right? A registry number, if you will, the NMLS. So they have that number. That doesn't mean they always have the education. So not only do we have to go through a crazy amount of education just to be a moderator in here, which is phenomenal, and definitely something I would suggest for anybody out there, whether they're in one of those channels. The education is by far the best out there for individuals. But when you are a licensed mortgage originator, you have a certain amount of tests that you have to take, 20 hours, and then that's continual education every single year. It could be 8 hours, which is mandatory, and then any individual state that you have in addition to. So it could be 4 more hours, it could be 1 more hour for your specific state.
And let's look at that. So Jerry, how does that compare? If you went and worked for, let's just use a real big one because there's one on every corner, Chase Bank. If you want to go be a loan officer for Chase Bank instead of the institution that you work for now, how does that education change? So when we say they're not educated in the same way, banks will tell you they are educated in a different way. But what is the difference? So Leroy just talked about 20 hours annual continuing education before we even get into what goes on here in Vetted VA. But how does that differ if you work at a bank or a credit union?
So being somebody that came over from one of the big banks, right? One of these big box lenders, I used to work for B of A, right? So One of the things that we ended up having to do there is you just take what we would, their modules we would take, and that would say it. You could just click, get through the module, and you're done. You get your licensing. It falls under the big umbrellas license. You don't really have that much in education that has to take place. I think the biggest thing that they focus on is just ethics, and even then it's click, next. And so there is a big difference when you're dealing with somebody who's working under a big box umbrella versus somebody who's an independent or a mini correspondent, a correspondent. And there's like different variances there that all fall under those individual licensed people, right? And so those licensed individuals are going to be able to probably go into a lot more detail and a lot more explanation as to a particular loan versus what you're getting when you go to some of these larger banks. Some of the larger banks are going to just really just hover 3,000 feet above the ground and just give you kind of like a quick little snapshot. Boom, move on to the next topic. Let me what is it? Let me bedazzle over here and shift focus. And so unfortunately you see a lot of people fall under misconceptions, all because there's that lack of transparency and a lack of like openness, because there really isn't any knowledge or understanding of how things are working. And so that's kind of, my feeling or my 2 cents in regards to kind of coming from that field before.
And it's really split in two, right? You're either working for a federally chartered bank or credit union, and they have these exemptions where basically the bank or the credit union is responsible for educating them. And I'm sure there is a local bank or a smaller bank out there somewhere that has a wonderful program that's more difficult and rigorous than what we go through with full NMLS licensing. But for the most part, everyone I've talked to that has been through it, very minimal, like you said, checking the boxes. So if you're looking at where am I going to get my loan from, and you go to either the local mortgage bank, say a branch of Guaranteed Rate, or a local mortgage broker, there's a difference. There's a difference in the education that they've gone through. So specifically today, we're here, all of us are members of Vetted VA. This is a Vetted VA program here that we're talking about. Nathan, why don't you walk us through sort of, we're really, what we've just talked about is just the basics of mortgage knowledge. And some of these groups are not even required to have as much education on basic mortgage knowledge. But when it comes to the VA product, it's a very specific product. I don't want to say vague. It's more like opaque, very open guidelines, very open to interpretation. And it's really important to know that stuff. So for the 4 of us, what does the Vetted VA education look like, and how does that benefit veterans?
Well, I mean, going back to the initial licensing, right? Once you get your NMLS, you can do any kind of loan, right? We get our NMLS license. I can do FHA, VA, USDA. I can do reverse. I can do conventional. I can do construction. I can do every type of loan there is. There's literally not a single added piece of education that we have to go through in order to do the different types of loans that are out there. And that's why, to me, the Vetted VA education is so important, because the one thing about VA is that it is very nuanced, right? It's not cut and dry. Sometimes there's, hey, does this make sense? Can we tell the story? Can we present this to the underwriter to show that this is in the best interest of the veteran? And honestly, this community that Chris and Nathan and everybody has built the education that we have here is second to none. There's some other great organizations out there that are doing excellent education of surrounding the VA loan, but nothing is as interactive with the actual veterans and active duty that are doing the loans as the Vetted VA community. I mean, we're in there every 8 days. We're in there moderating it often, sometimes more often than that. A lot of us do code check-in, even on our non-moderating days. But I do think that added experience of seeing and interacting with the members of this group puts us on another level, because I tell everybody all the time, like, I'm not a VA expert. I've probably done over 1,000 loans. None of them are the same. I learn new things all the time. We get presented with scenarios that are happening within this Vetted VA community that all of us are like, oh, I didn't know that. Or I didn't know you could, it's a constant, learning, because the VA comes out with circulars, right? They change their guidelines, they modify, they update. And proud to say, a number of vetted VA moderators have been the catalyst for some of those modifications. We're very heavily involved, not just in this community, but with the VA directly. So I think that the education and the constant, the just continuing education that we get by being moderators of this group really does make the moderators and the lenders and the agents in this group better at these loans than anybody else.
Yeah, I agree. And I think it has a lot to do with the interaction that we have just like this, right? Amongst each other. You have no idea how much knowledge gets spread around because we have this community, because we have this ability to talk to each other and share those scenarios. That was a great point. Great point.
I'm constantly amazed that, I don't know, there's 200, 300 members, somewhere in that range, that it shocks me that there truly is no circumstance that comes up that someone hasn't dealt with. Like, I will have the most arcane 1 in a million situation come up. You throw it out to the group and someone goes, oh, I dealt with that 6 weeks ago. And they know exactly how to deal with it. Or, hey, you need to call the regional loan center and go through this. Or, hey, you have to do this, reach out to this person. It is a great, great resource. So just kind of putting a bow on it, you've got many, many choices of where to get your loan from. But just because someone's title is the same as someone else's title, it doesn't mean they have the same level of education, they have the same level of experience, or that they have the same VA specific training, because everyone can do a VA loan as soon as they are licensed to do loans. And it is a very unique product. So I kind of want to give all three of you a chance to give your answer to this. I get a lot of my clients from online, from our podcast, from a live show that I do on Wednesdays. And one of the things that we put in the form when people reach out and inquire is, what's most important to you about a loan? Or are there any thing that you want us to be aware of? And they always, 70, 80% of the time, it's some variation of, I want to make sure I'm getting the lowest rate. So if we're looking at criteria, when someone says, hey, you could get your loan from a bank, from a credit union, from here, from there, for borrowers, almost the only thing that's tangible and measurable is that interest rate. So they default to that, which is important. They should be getting competitive rates and terms, but it also sets them up to sort of, Jerry talked about the bedazzle them over here and then look over here. There's a lot of smoke and mirrors with that. And with these big box lenders, we're going to get into how they quote rates and what the situation looks like. But Leroy, if someone reaches out to you and says, hey, I know I'm well qualified, 800 credit score, I'm buying well below my means, I want to know I'm getting the absolute lowest rock bottom rate. What do you respond to that borrower with, and what advice do you have for them?
Well, until I see an application, and I think the application is where it starts, right? That's the investigation part of it. Because whether they're looking on Credit Karma or their Experian account, there's a lot of factors that go into rate. So I'm all about a competitive rate, but what I want to know is I want to know service. I want to know how many VA loans that they've closed over a certain amount of time frame. And statistically, through the MMI report that we have as lenders, we can check and see what that data says. And based off of that data, just back in 2023, the average loan officer closes 0 to 3 VA loans a year. So when you look at a niche group like this, where we have education based, that's what the majority of our business tends to be, is with veterans. So that's some of the questions I would ask as far as what's important to you. Is rate the only thing? Because honestly, sometimes you might not have the most competitive rate, lowest rate, because one bank is hedging over another, or they're dropping, or they're having different incentives that they're doing. That's why it's nice as an independent mortgage broker is we have several different options that we look at. We look at speed. What if you're in we'll just use California or Colorado, right? I'm not in a market where I have to close in 15 days, but I can. But in some of those states where that market is really competitive, your offer might not even be looked at unless your lender can close in 15 to 21 days. So speed's also an urgency. And sometimes you're going to pay for that speed. You might have a difference of an eighth or maybe a couple $1,000s difference in cost, but speed and efficiency is what's going to win the deal. So there's a lot of different questions. So usually if I get an email, which I got one the other day of, hey, what's your rate? Well, what are you looking at? Where are we at for timeline? What's your credit? What's your debt to income ratio? How many people are on the application? What's our timeline? There's so many different things, because different states too, we have to keep this in mind, is everything's regulated when it comes to appraisals through the VA. So in Arizona, it might be 7 days. But if it's in El Paso, Texas, okay, we're looking at maybe 10 to 15 to 20 days where it might take to get that appraisal back. But if we've got a contract at 21 days, appraisal's got to be ready to go. And so you need to have a loan officer that understands those timelines and how to efficiently move that file, not only through the loan pipeline, through underwriting, but to hold title accountable, which is a big part of it, right? Hold the agents accountable, inspection times. What's our timeline on when we got to order that appraisal? There's so many questions, Josh, that go into just not just low rates. You have to have a conversation. So sometimes it could be by email, WhatsApp, video call, but I think having that engaging conversation to find out what the real goal is there. And if it's just about rates, well, you can keep shopping until you're blue, but until you lock that loan, it doesn't really matter.
Well, part of what I like to tell people, we get shopped all the time. You get shopped, I get shopped, Nathan gets shopped, Jerry gets shopped. So we have this conversation and I ask, well, let me see the loan estimate. Reputable lenders, and we'll get into that sort of label of reputable, because especially when it comes to government loans, both FHA and VA, you do see a certain subset of lenders that's to the high side, way to the high side. But most loans, we're in a pretty narrow range. No one ever calls me up and goes, I got a rate that's 3/8 lower than what you gave me. If we miss, someone got an 1/8 lower. And many times they're paying for that 1/8, and borrowers don't understand the difference between 0 points at 6% and 5.875 at 1.5 points. So we can just kind of circle back to that. But Jared, what do you do in terms of educating folks that the range shouldn't be that large and how to actually compare one lender to the next? So what I like to tell people, when you're leading with, I want the absolute lowest rate, there's so many criteria that, like Leroy just mentioned there, that it is the easiest way to bamboozle someone or get them paying more for their loan than they should. But what are your thoughts on that, Jerry?
So there's a lot that goes into this, right? So when it comes down to rates in itself, there's a lot of things about your particular scenario that differs from somebody else's. Somebody may miss something and then they're quoting you a rate based off of some other detail, or they may be not even have pulled credit, right? That's what we get a lot of times, or they'll do a soft pull because they're like, well, they did a soft pull on my credit report, so that's how they know what score, and that's what they quoted me off of. Well, you can't take that to the bank. You can't utilize that. At the end of the day, what's going to end up happening is a soft pull is only going to give you an idea of where your credit might be, but it doesn't tell you exactly where it is. And so by the time they pull credit, guess what? Something pops up on it, and all of a sudden your score is 20, 30, 40 points lower. That's going to impact you. So when we're talking about cost, when we're talking about rate, when we're talking about communication, when we're talking about understanding exactly your scenario, there has to be an in-depth conversation. So to just summarize it to just one thing, there's really no way to do that, because you got to understand that person's particular scenario, what the ins and outs of their financial situation are, plus also identify, okay, where was your credit? Where's your credit been over the last couple of years? What does it look like? Is there any hiccups that I need to be aware of? And think, because that could ultimately lead towards either what we call an approved eligible result or a manual underwrite. And if in one of those cases you have too many late payments in the last 12 months or the last 24 months, that's going to impact your rate and impact your ability to even qualify for a manual. And so ultimately there's just so many factors that come into play. And ultimately it has to come down to, one, how comfortable you are with the individual that you're working with. How responsive are they? Are they answering your questions effectively? And are they asking the right questions in regards to draw out some of those facts? What are their rates looking like once they do pull credit and they do that? What does it look like? How far off are they? Are they an eighth off in rate? But how much is the cost difference? We're talking about $3,000, $5,000, $8,000? Obviously, depending on the purchase price being higher, that's gonna make that dollar amount much, much larger. $800,000 house, 1 point is going to be $8,000, whereas somebody could be charging you potentially half a point for that same rate, which is $4,000. So that's a $4,000 swing, right? And so ultimately, all that comes into play, and you have to really sit down and actually analyze basically the main boxes, which in my opinion, you're just going off of box A and B. That's it. Don't look at anything else, because box A is really going to be your main identifier, whether or not somebody is really charging you for something, or are you actually getting a good deal. So that's kind of where I lead that conversation a lot of times.
Can I want to chime in on what Jerry had said about those boxes, but we just had this big shift, right? We're 3 days into it. So we've got contracts coming in and we've got buyer brokers now because the veteran obviously can now pay the commission on it. So that might be something to really look at as well, because those lenders that are not disclosing that commission fee, and if they're paying 0.5%, say the veteran to comp or the co-broke is going to pay, say, 2%, and they signed a buyer broker agreement for 2.5. Well, the veteran now is obligated to pay that 0.5%. So that needs to be in that box A, that H area. And are those lenders going to be able to disclose that and understand that and then communicate that back? Is the lender going to call your agent? And normally we'd never call the agent and say, hey, what's your buyer broker, Nathan? You know, having that conversation like I had today, you know, we have to have that 0.5%. It's got to be on that LE. That's got to be on that loan estimate. That's a cost to the buyer, right? So that's got to be disclosed as well. So having an educated loan officer that knows how to move and navigate through kind of these new waters that we're in with this NAR settlement, that's something that's got to be very important. And you've got to have a lender that's going to call and get that agent. And that agent should know that we're not moving that loan at all until we have that buyer broker agreement.
It's really early in that process. I had a borrower just ask me about it like 2 hours ago, and I said, no one knows. You know, we're just now, give us 6 months and we'll have a pretty solid idea of how this is going to shake out. But for now, you got to see some contracts, you got to see some deals, you got to see how sellers deal with it, agents deal with it. And from our end, we're going to have to figure out how to package that into the transaction. Nathan, one of the things that came up when Jerry was talking that is always interesting to me, whether it's in the Vetted VA forum, Reddit has some forums where a lot of veterans go and ask questions. Someone will ask a question and there's always people in there say, call X lender absolute best. They got me the lowest rate in the history of the world. But what Jerry said is, if I had a 560 credit score and I'm telling you this person got me the greatest loan, if my brother with an 850 credit score, he probably is not going to be the same benefit from that lender. So when you have people saying, talk to this lender, they always have the lowest. When we're talking in the context of this discussion of where are you going to get your loan from, is there any specific place that has the best rates for that person that is chasing the lowest rates?
Well, I mean, me, obviously, but other than that,
because
no.
you're VIP with all of the investors, and they go,
100%
Nathan is our preferred source.
I'm lower than no. You know, that what you just said, you know, making sure that we're comparing apples to apples to what Jerry said, I've seen from everyone. And I'm not going to, I'll pick on Veterans United just because I love to, but all of them. It doesn't retail, banks, whatever. I've seen loan estimates. We've all seen loan estimates that have that little box up there that says not locked. And man, I think the main thing that a lot of borrowers need to understand is that form is very easy to manipulate. We can put whatever we want in there. So making sure that you're working with, starting with a loan originator that is honest and transparent. Right. One thing that I think a lot of my clients, and I know a lot of people in Vetted VA do this, is I'll send the rate card. Here's how a rate works, right? Because I think that's one of the biggest things that going to speaking to, hey, do you get 5.625 or did you get 6.25? And why did you get it? And how much did it cost? And what's the difference in the monthly payment between this and that? It's so, I mean, you know, the trust but verify. I can't just emphasize that enough. It's so important that you're working with someone that is open and honest and transparent and is willing. You know, I tell people all the time, ask them how they get paid. If someone starts hemming and hawing when you ask them how they get paid, that's a red flag to me, right? If they were, oh, well, yeah, no, this is exactly how I get paid. I make a percentage of your loan amount. Doesn't matter which lender I take it to, it's the same across the board. So I always find the best rate for my client, right? And that's what everyone, as brokers, that's what we do, right? That's why we became brokers. So we're not tied to that one big box lender that says, here's my rate, here's my program, here's all my rules. We can say, hey, I understand that, and that's why we don't allow the non-vetted people to be promoted within the group, because we don't know how they do business, right? Everyone in here is held accountable to how we do business. We send in our VTV reports. They see not only our rates that we're locking in. They see the APR. They know exactly what costs and what fees are being put into our loans, right? And we're held accountable to that. And I think that's another thing that sets this community apart. And so when someone says, "Oh, I got a great rate from lender A," I'm like, my first thing is always like, "Hey, congratulations! If you're happy and you got your house, awesome,
That's
awesome. If you want to get into the meat and potatoes of your loan, let's take a look at your closing disclosure, and I can explain to you where this fee was, or why that fee shouldn't have been charged, or why it was charged." I mean, I think we all remember about 5 months ago, I had we didn't put this in the main group, but within the private chats of the moderators, right? We had a lender that was promising my client like this great rate back in like April of like 5.5%. Didn't mention to him that they were charging him almost $18,000 on a $425,000 loan, almost $18,000 to buy that rate down. And first-time home buyer, he didn't know what was going on. He wasn't paying attention to that, and so you got these great sales guys that are able to do the sleight of hand thing, and like once again the rope-a-dope. Hey, look over here. Don't pay attention to this. Look at that rate. Right? So I don't know. Going back just to answer the question, find someone that you can trust. Find someone that's been referred by a friend or family member, and then don't be afraid to shop. Like you said, all of us, we all get shopped. Not afraid to get shopped. I think every borrower should shop around. There's no, unless you just find somebody you click, you trust that person is being transparent and honest, and you've been referred and you've seen their references and their Google reviews, and you have all this thing to back it up, then yeah, move forward with that person. But otherwise, it doesn't hurt to shop, and no one should be worried about their clients shopping around.
I tell people this. I say, listen, if you talk to 2 or 3 lenders, first of all, please don't talk to 5, 6, or 7, because all that's going to do is just confuse you. But if you talk to 2 or 3 different lenders and you don't notice a qualitative difference in the discussion that we had, kind of relating back to what Leroy said, what Jerry said. I called Leroy, and I combined you to Leroy and Jerry and to Larry. What Larry said earlier about that knowledge and expertise. If we have a discussion and you don't feel that, you don't know that there is a qualitative difference between that and the conversation you had with the other person, either I failed or you talked to 2 really good people. Like, it doesn't happen. I don't know that any of us have ever come across a borrower that ends up talking to both of us. But if they talk to any of the 4 of us, they're in good hands. So either they got lucky and they found a couple of really good loan officers, or somehow I was not on my A game that day and was not going through their issues, their questions, and making them feel heard, understood, and that we have a game plan to get them the best terms that they qualify for. So we've talked about, when you're looking at all of these options of where to go get your loan from, the criteria. Borrowers always lead with the criteria that they can see on paper, whether it's 5.5% and $18,000 or 6% and 0. They don't always know what it means, but they do see the number and they get attached to that. We all talked about knowledge, expertise, making sure your file is being structured optimally in the way that you want it. And if you don't know the way that you want it, that it's at least being explained to you, so you can choose from a few options of the best structure. I always like to say that there is a third element to it, and that third element is you have to have a really good rapport with who you're going to be working with. Because if it takes 1 to 2 months to find a home and then 21 to 45 days to close it, this person could be in your life really close for like 2 to 3 months. And I'm sure you guys feel the same. It's weird when a loan closes and this person that I've talked to 5 times a week for 6 weeks is not in your life much going forward. It's a weird process. But I think all of us have that type of relationship with our clients. But Leroy, how important is that? I don't think we have to be best friends. We don't have to go over for barbecues, but you do have to have a rapport and really good open lines of communication with your loan officer.
I think it's imperative. When you look at some of those organizations, or FT, I always just say that, like the big banks, right? Or those that I'm all about boundaries, but those boundaries for me go to the wayside when I've got somebody in Germany moving all the way back to America. And so having that flexibility and that rapport, and you're going to do that. And I want to make sure that I'm not just interviewing somebody when they're wanting to do a loan application with me. I need to know that they're a fit for me as well. So there is times where they're not maybe a fit, and hey, that's okay. And I wish them the best of luck. And those fits normally, Josh, those are going to be those that aren't going to share and be transparent with me about their finances, that aren't going to be able to share the information that I request that is demanded on the loan application, right? Easy in, easy out is how it goes in the mortgage business. When you have a full application, you have all the documentation up front. And when I'm trying to pull teeth to get a bank statement or a fourth page of a blank bank statement, that's going to be a challenge. Because if we're in an urgent situation when we need to move, you got to be moving just as fast as I do, especially if I'm going to have this relationship with you in 30 to 45 days. And sometimes it's 90 days, right? Does your loan officer, and I think you brought this up very, very well, is if it takes you 2 months to find a house, well, we pulled credit right at about 85 days. You go under contract, you're going to need to know, hey, we're going to have to pull your credit again because your credit's expired. So having a loan officer that's going to be in front of the pack and in forward and foresight, the things that could come up in the file, that's crucial. So I think relationship has a lot to do, not just to have a good rate, but a competitive rate, competitive fees is equally important. But I do think that relationship matters.
Absolutely. This, why don't we do this? I would love to go through, not that the four of us are all knowing, but we do a lot of loans and we talk to a lot of veterans that are shopping their loans among different places. So the criteria here that we've listed, competitive rates and fees, knowledge and expertise, rapport, and one that we didn't really mention there is availability. Some of these big box lenders, they have very defined business hours. If you need to write an offer at 8 o'clock on a Saturday night, good luck with that. They'll have your pre-approval letter for you on Monday. But when we look at those four criteria, how would you say each of them measure up? And you guys can all chime in on this. But if we look at, we say I almost put these into slightly different groups. We have the big banks, the Chase, Wells, that are everywhere. We have the national, the big mortgage lenders. Leroy had mentioned Fairway, but you've got Rocket. Rocket will fall more under the big box, but Guaranteed Rate. These places that have sales forces that look a lot like us, knowledgeable, experienced loan officers, but they're working in sort of a different area. And then you got the big box lenders. They're call centers that do a lot of marketing, feed these loan officers, and then we've got brokers. So when you look at those four, how do each of them shake out in terms of rates and fees from your perspective, Jerry?
So when it comes to rates and fees, I think a lot of it comes down to just even the way they disclose a file, right? When they're sending you out a loan estimate or the LE, we keep referencing back to, a lot of times you'll see that they try to bedazzle, right? They'll try to show you a rate that's what you want to see. They're not showing you the cost, or they try to make it seem like as if, right, when they're comparing, let's say, us versus them, you'll see that all of a sudden they're collecting less on impounds. They're doing this or that to adjust and maneuver the numbers to make it seem like it's a legit deal. Well, because they're third parties, they don't actually have to disclose the official. And as long as they're not disclosing that particular company's fees, they're fine. They're not going to get hit with any penalty. But guess what? When we get a file and we submit a disclosure when it's already locked and ready to go, what happens is we have to disclose that the actual title and escrow company that's listed, right? And then on top of that, we actually have to disclose their fees. If we are off on their fees, that now becomes our responsibility to cover that loss, because we cannot charge over 1% or underestimate by more than 1% on those fees. And so you see a lot of manipulation of those numbers. And to me, that's probably one of the biggest trust factors that I have with anyone that's already coming from one of those lenders, right? And we are talking about, those not non-big box, but still retail driven. And what they're doing is they have a lot of overhead, they have a lot of expense, and now it's trickled down to the veteran, and ultimately it impacts you and your ability to qualify, because now you're either coming out of pocket more, or you're taking a higher rate, or you're being promised a lower rate and then charged through the roof. So those things all come into play.
Guaranteed Rate has what, 700 vice presidents of lending? I mean, it's a lot of overhead.
Yeah, definitely. Yeah, I mean, Fairway. I mean, I know you got something you can say about Fairway, but those companies in particular are companies that have been shown and proven by statistics, by numbers, that the cost and fees are just not in line with what when you compare a broker or just somebody who's more in line with that cost to do the loan, right? Because now all this extra overhead, somebody pays for it, and trust me, it's not the loan officer when you're working in those channels. We as brokers have limited overhead. That limited overhead then translates to less cost. That less cost translates to savings on your end. So ultimately, as long as people understand that and are open to actually hear that, have that conversation and hear it out, they are understanding that all of a sudden it's like, oh, ears perk, eyes open, and all of a sudden it's a, oh my goodness, I can't believe I was about to go into this, right? And so you definitely see that big box lenders, they're just going to throw whatever they can at you, and if it sticks, it sticks. If it doesn't, hey, then great, like let's go, like we just go on to the next person. And like you were mentioning, the availability, your opportunity to actually connect with somebody on a Friday, Saturday, Sunday, it's not going to happen when you're talking about those other lenders. And so that also comes into the equation. It's like, so you're overpaying, and on top of overpaying, you're also not going to be able to qualify because they have extra layers of rules and requirements. Like it just doesn't add up at the end.
Well, this is always interesting to me. People ask, well, where can I go online to see interest rates? Because when they just search, you're going to see bank rate. You're going to see crazy stuff with these liars tables that are whoever can advertise the lowest rate is going to get the most calls. So that's what they're looking at doing. So I always talk about, if you look at Optimal Blue publishes their mortgage market index, Mortgage News Daily, they publish a good index. And if you look, they're generally pretty accurate. But if you look, their conventional is really close to what we're going to quote. But the FHA and VA is always a little bit higher. For whatever reason, the direct lenders have chosen to subsidize competitive conventional pricing with less competitive government pricing. Is that what you see when you're looking around and getting the difference when you have a veteran comparing versus a conventional borrower comparing what you're looking at, Nathan?
Yeah, I mean, the when it comes to the big boxes, right? We all know, everyone within the industry, we know Govy is where they make their money, right? Conventional, they break even, but Govy's where they make their money. And it to me, it's actually terrible. I mean, having worked at Fairway, they're the one that I always compare to because I was there. I drank that Kool-Aid, man. I was so good against selling against brokers. But as soon as I found out how margins worked, how the secondary markets worked, and how much money they were actually making on loans, it blew me away. It blew me away that they were doing that and doing that disservice to clients, not just veterans and active duty, but regular people that are doing their FHA loans. I kind of used to use a very simple thing. I'm a one-man show. I work from home. My wife works with me, and I always say, like, you like that office that guy works at? I hope so, because you're paying for it, right? I don't know. It just goes. I always go back. Don't be afraid. To the members of Vetted VA, don't be afraid to ask those questions. Hey, is there a better rate available? And if there isn't, why? Right? Why is this the best rate? Why are you offering in this rate? And if someone is, and if a lender that you're working with is giving you a rate, like as in one single rate, here it is, here's your rate, that's a red flag. That should never happen. You should always get multiple options of of how your loan can be structured, because there's always more than one way to do it. Whether it's buying down the points, whether it's taking a par rate, whether it's taking a higher rate and getting a lender credit to help cover your closing costs, right? These are just the simple questions that that you should be able to ask as a consumer, and any lender that you're working with, any loan originator that's worth their salt will be able to answer why that's your rate and explain in detail, like Jerry had mentioned and Leroy had mentioned. It can do with credit. It can do with your debt to income, how many people are on the loan. I mean, I remember seeing this one chart one time when, everyone always asks us as originators, what's the interest rate, right? And there was this breakdown of like, there's 512 different factors that can affect your specific interest rate on a loan. And so if you ever get just one rate, that's a red flag. If they can't tell you how they get paid, that's a red flag. And if they can't break down all the fees, that's that's another red flag. So just, ask questions. Don't be afraid to ask questions. You are the consumer. We work for you. And that's, I think, that's probably one of the biggest things for every member of Vetted VA to understand, is that we work for you. So ask questions, ask away.
Let's talk about what I tell people, that when you're talking to me, you're talking to anyone else, you should walk away with some answers. So you're asking questions, what are the answers? What's the maximum I can qualify for? Or if you say, I don't want my payment over $2,500, what's the maximum you can qualify for within that constraint, whichever you're looking for? And then you say, what's my interest rate, which tells us what your monthly payment is going to be, including a reasonable estimate for taxes and insurance. And sort of that last one there is total cash to close. A lot of our veterans, a lot of our FHA buyers, they're first-time buyers. They've got a finite amount of money. So if someone quotes you a rate with $18,000 of points, the rate looks great, but you don't have a spare $18,000 to put in at closing. So it's important that you get all of those answers. And when we look at two of the biggest big box lenders, I had this recently it was a conventional loan. It wasn't a VA loan, but the biggest retail lender in the country. This borrower had a very simple, straightforward situation. He was very organized, very comfortable digitally. So he did the online application. Someone got back to him, said, sir, your 800 credit score and $350,000 a year income is going to be perfect for this $500,000 loan. Quoted him a great interest rate. So he knows his interest rate, he knows his payment, he knows he's qualified. He goes out and gets a home under contract using their pre-approval letter. Well, on Monday, he sends over his contract and they send him the loan estimate, and it shows had to have been 1 3/4 points for that interest rate. It was $9,000 higher than where we were for the same interest rate. So the rate looked great, payment looked great. The fact that he got qualified, and he told me straight up, he goes, I like the guy I'm dealing with. Everything's great. But he says, this is it. Those are what our terms are today. And I happen to know that the biggest VA direct lender in the country does the same thing. They don't tell you how many points. Here's your rate, here's your payment, you're qualified. Then when a contract comes in, oh yeah, that rate is almost 2 points to get that. If you want a 0 point rate, we're nowhere near competitive. That's why we didn't tell you that number. So it's important that you're asking all of those questions and getting good answers for them. The actual title of tonight's show is why you don't get your loan from a big box lender. I think I have the number one reason why you don't want to get a loan from a big box lender. Without revealing too much and lifting up the kimono, I ask you three guys, if you were really busy this week, how many new customers did you talk to in a given week? Leroy, what would that be? Is it 10, 20, 25 in a given week?
I'd probably say, yeah. I mean, that's pretty fair. 3-4 times a day, because we're working on the loans as well, but structuring for times or reach outs, or like we have our clientele. I think Nathan brought this up. For me, it's always been on a referral based system. So yes, I teach a lot, and that's how I attract agents to potentially do business with me or send their clients over. But a lot of my business is what I've built over the years through reviews, family, friends, those that I take care of. And so a lot of those, I'll field those calls. Obviously, I'll take the new clients on as well. But when you've been doing it right, you've been doing it, ethically and transparency, you just attract more. So we try to have that all set up. Having a team obviously helps a ton. Yeah, I think that's the way I'd hit that. I kind of want to go back to what you said, though, Josh, because I think it's really important when you look at the pre-approval process. And I think this is going to get missed by a lot of people. And so hopefully, a lot of people hit replay on this. But when a lender is doing a pre-approval, that conversation about that commission now for veterans especially needs to come up, because I might have Jerry pre-approved, but now Jerry signed a buyer broker agreement for 3%. Well, there's only a co-op comp or whatever of 2%. Well, Jerry doesn't have the other $5,000 that he needs to come in closing, because he's under a contract with a real estate agent who's charging a 1% because they make 3%. Those conversations need to happen. They happen now, because that pre-approval might not be legitimate once you get that contract over. Now Jerry doesn't have the $5,000 to pay the real estate commission, and there's no going back and renegotiating it because you're under contract. You just no longer qualify. 100%.
Jerry, Nathan, is that a reasonable number? Somewhere plus or minus 20 20 new clients a week to keep your business afloat that you're talking to. So in a 6 business day week, 2, 3, 4 people is what we talk to a day.
Yes.
These big call
Right.
centers.
Yeah.
these
Well, 100,
guys-
100 loan conversations a month.
Okay, and that, yeah, somewhere 80 to 100, I think, is kind of all what we are hoping to have to achieve our business goals. That's how many families we can help without stretching ourselves too thin, without giving too little to each one of them. These big box lenders, if you're in a cubicle in the call center with a headset on 12 hours a day, you're expected to take about 10 of those a day. It's just boom, where you're dead right. It just on, off. How much can you get out of them? How quickly and move on? So it truly is kill them all, let God sort them out. They are marketing organizations that market at mass scale to fill a call center. So they are constantly having to recruit and train brand new people, put them into a call center, and overwhelm them with leads. I've got a buddy that about 5-6 years ago, he's bartending. Great personality, awesome guy, great voice. Someone comes in and says, "What are you doing tending bar? Rates are super low. You can come in and do loans." So he had been there for like 6-8 weeks, and he's telling me what he's doing. I go, "Well, how many leads a day are they giving you?" He goes, "It's a minimum of 10, sometimes as many as 14 or 15. I'm like, "What do you do with that?" He goes, "Well, we have the front end call and we pre-qualify them, and then we get them to send in their stuff. And then the processor figures out if they can qualify." And like that's a wild way of doing business. And it's very different in that direct big box heavy marketing channel versus what we do. I think anyone listening can tell the 4 of us very different, but also have a pretty similar style of onboarding a new client, getting their questions answered, getting them the information they need, arming them with facts, and determining what they can be approved for. So
another thing real quick that I would just factor into that too, and I talk to my clients about this a lot, and when we're talking about compensation and we're talking about, all of us, I know for certain, the big box, that call center guy, he gets paid no matter what. Whether your loan closes, whether he closes 15 or it doesn't, he's getting paid. Right. And I do believe that this is an important factor where, the brokers that you work with, the 95% of the community here in Vetted VA, we get paid to close loans. Right. And I do believe that it's an important factor like that. That's the vested interest that we have with you. Right. We're working not for free. I don't want to say for free because I hate that. That's not the reality. We all make a very good living, but we get paid to close loans. Right. And I always look at do I want the person that, this person's getting paid no matter whether I get into a home or not? Or do I want the person that his commission, his pay is tied to the success of my loan?
Yeah.
So,
at the end of the day, those things come into play every single time, because if you don't earn, if you have to work to eat, trust me, you're not wanting to go hungry. And as an individual who really focuses in, and I can say that for all 3 of us, or all 4 of us really, is that when we're talking with somebody, we actually are invested in you, right? Like we actually care. We really do, in comparison to some of these big box lenders, because I'm telling you, as a guy who sat in those chairs, who worked at those big banks and literally had to take the phone calls, taking 80 calls a day is not out of the norm. 80 calls a day is very, very consistent with the requirement of what they expect. Why? Because it's churn and burn, baby, churn and burn. And you'll literally hear those words being said over and over, because all they care about is numbers. And what you are to them is just another number. But when you have somebody who actually has a vested interest, who cares and understands the rules, the guidelines, the expectations, the ins and outs, the quirks that you can get around, as long as you have some basic knowledge of the VA loan, like it really comes down to once you start having somebody with some real experience and some expertise in this area, that person outshines the other individual in a hot second, because they're there to actually execute on what you want, not on our own. It's for what you want.
And I think it contributes to the due diligence.
Yeah.
Right. I always say that's why we check all the boxes. Right. I know you guys operate the same way I do. That's why we ask for everything up front. right? We don't want to spend our time, and we don't want to waste our borrowers' time or get their hopes up or give them false promises because we didn't check every single box to get them there. Because those are reputation ruiners. The guy on the 800 number, he doesn't have a reputation. He doesn't care. I mean, I'll just put it bluntly. I don't know how many everyone on this video, everyone in Vetted VA has had multiple rescue loans, right? Where
multiple every month, Nathan.
Oh my
multiple every month.
You get the call from the agent. Oh, I don't know what happened, but all of a sudden we can't close. And you look at it, and it's the worst thing ever when you get that file and you go, this person was never qualified, and now they're losing earnest money. They've wasted time. They've put in their notice that they're. I mean, it's really like some people just don't take this job serious enough of how life shattering it can be.
As early as the certificate of eligibility. Early as the certificate of eligibility, and they could have found that out from the very start. Absolutely right.
And the one thing that we haven't really brought up is just between these different lenders, being a big box lender, what we would say is retail lenders and brokers, is the overlays that come into play. And so when you have an FDIC type of banking situation, they have investors, and so they're going to have the cookie cutter type of overlays. The automobile associations out there that try to do mortgages, right? You can't do a 640 credit score VA loan. Well, that veteran could have bought in 2020 and changed their entire trajectory of their financial position, but they were told no. And that's just not the case. Obviously, being in the group, we know that the VA does not have an actual credit score, right? It has criteria, but the investors have, their credit score. So there's a lot of companies out there that change their name and put the word veteran in it, have been turning veterans away with 639 credit scores. Those are rescue deals too, Josh. And so that's the thing to also look at is what are their overlays? What are their parameters? Can they do a 565 credit score because they have no late payments in the last 24 months and they have sufficient compensating factors, right? 2 of the 3 compensating factors where the loan makes sense for the veteran. And so that's another thing that you got to look at when you're out there shopping is what are those overlays? Don't be afraid if you have a low credit score. That doesn't mean you can't get a loan. We got to look at the compensating factors, and a great mortgage professional will actually tell you what those compensating factors are and if they have a channel for that loan. So very important to look at the lender overlays as well.
We're closing in on an hour here. We like to keep them at about an hour, and I'd like to give each of you sort of a last catch-all here. Any advice, any thoughts on the different channels? And I want to lead off because in listening to you guys talk, a couple things popped up here. That idea of getting a bunch of leads, churn and burn, versus Leroy talking about the best thing that he can do, that we can do as loan officers, is taking really good care of people so that friends and family refer those clients over. It's a much easier process. There's already a transfer of trust. So when I first started in this business, someone told me, hey, you can shear a sheep as many times as you want, but you only get to skin them once. And if you have a relationship-based business where you're working in your community, whether that's online, like we do with Vetted VA, whether it's at your church, your local community group, whatever part you're in, even if it's just your own Rolodex, when you're working in that community, you have a vested interest. You can burn your reputation and then you have nothing in that community. If you're being fed by mass marketing, 10, 12, 15 leads, not clients, not introductions, leads a day, your focus is on how many of these can I kill so that I can have some pelts on my wall versus building that long-term relationship and having a repeat and referral client. So consider that in terms of how long the person you're dealing with has been in the business, the channel that they work in, and how vested they seem to be in making sure that you are happy and come back with to them when it's time to refinance. Refer your friends, your family, your children over to them when it's time for them to buy or refinance. So that's kind of my final thoughts on it. Leroy, what do you have?
I think we covered so many different topics. I know we all got really excited because we see this every single day on the rescue deals and to talk about it. And our goal, our mission is not to bash other lenders as much as we can because we've had to rescue half of their stuff, right? Or we don't change our names. Our brand's always been the same. Is don't be afraid. I think getting in contact with a professional and asking those hard questions. How many VA loans do they close? What do they do for the community? Relationship. It's not just all about rate, Josh. It comes down to, many different factors when you're dealing with a professional. And so I think that that's the thing. Don't just shop rate, but shop the person.
Perfect. Jerry, what about you?
Yeah, I just following with where Leroy was going with this, like the relationship matters, right? At the end of the day, that relationship that you have with that individual that's going to be serving you there needs to be that level of trust there. And that's not going to be something easy to do over a 5-minute phone call, right? But once you do that and you're consistent in your pattern, and you, like you were saying, you start doing it repeatedly, and then all of a sudden people recognize what you're offering and what you're then delivering for them. They start to tell their friends. They start to tell their family. They refer us. Why? Because we care. We actually take our time, invest our time in them and in their benefit. Because at the end of the day, the more I know, the better I can serve you. Also, same thing happens when there's a problem. If you don't communicate it to me, I can't fix it. I can't fix what I don't know, is what I tell people. And so communication is key. So if you have an open line of communication, you can honestly, I don't mind if you even have to complain to me that something's not working or that someone is not representing you the way you were wanting it to be done, when it comes to even on the real estate agent side. Because sometimes it's just a simple, hey, let me shoulder tap you real quick. Let me let you know this is where you're off, and pivot and adjust your positioning, because that's going to make a difference. Now we can both be aiming in the same direction and hitting our target. So at the end of the day, that's what I feel it really comes into play with us, versus when you are dealing with some of these big box lenders, you're going to be dealing with a lot of people, and you are probably going to have a hard time getting a hold of that one individual. You're likely going to be passed around a few times, transfer before you actually get to speak to that person. So at the end of the day, when you have a direct line conversation with me, you can say, hey, let me text you real quick. I'll respond to a text. Heck, you can text me at 11 o'clock at night. Sometimes if I'm still up, I'm responding back. Why? Because I actually care. I know what it's like to be a consumer, and I know that if you're texting me, that you have a question or you have a need, and I'm going to try and respond if I'm awake. If I'm not, hey, guess what? First thing in the morning when I see it, it's like, hey, I seen this. Let me get back to you. Give me X amount of time. But at least have that open dialogue, and that trust needs to be there, because that's what's really going to drive everything for you.
Absolutely. Nathan, we're going to give you the opportunity to close this out.
I'll keep it short and sweet. I got 3 things, right? Trust but verify. It's all over the page. It's our number one thing. Don't be afraid to ask questions. And number 3, don't be afraid to get a second opinion. The answer is never no. It may be not right now, but yeah, those 3 things.
Absolutely. All right, gentlemen, I appreciate you joining us, sharing the knowledge and wisdom with everybody tonight. For all of you watching, hopefully you took something from that and have a better idea of how to choose the right source and the right location for your loan the next time it comes up. So join us next week. We'll be back next Tuesday with another group of pros. Thanks again, everyone. We'll talk to you soon.